My name's Giles McMullen. I'm here in Copenhagen at the headquarters of Sparinvest, and I'm joined by Klaus Blarbjerg. He is the Senior Portfolio Manager for Fixed Income for Sparinvest. And among the funds he manages is the Investment Grade Value Bonds Fund. Now, Klaus, tell us a little bit about the performance of this fund. It's obviously been a difficult time for anyone investing in the bond market recently.
Yeah, it's been really tough, and especially for this fund, you can say, since we have had a big exposure to financial companies.
Now, what was the rationale behind going into financial companies? Because obviously they've been hit the hardest. We've had the worst banking and financial crisis in a long time.
Well, you see, we have a value approach to investing in corporate bonds. And because of that, we deemed it to be prudent not to have too much LBO risk in the portfolio, because when we look for companies, we tend to find the same companies as the private equity firms. And to avoid the LBO risk associated with the private equity firms, we made a decision to be overweight financial companies, because in financial companies you see no LBOs, and that's because there's no rationale for doing an LBO in a bank.
Now, you talk about LBOs, of course that's leverage buyouts. Why is that a bad thing for a bondholder? It's
bad for you if you don't have a covenant that ensures you can get out with the skin on your nose, you can say. Because once you have the private equity firm coming in, they buy the company for borrowed money, and in doing that they leave you as a bondholder with a lot more risk after they have bought the company than the risk you had once you invested into the company. So the company has a certain amount of debt, private equity comes along, and in order to buy that as a leverage buyout, they increase that debt, and as a debt holder that leaves you in a worse off position. Exactly.
So as a result of that, you thought you'd keep away from that sector and go into financials.
Yes.
So that made sound sense. But now we've had this financial crisis, so where does that leave you now?
It leaves us with a lot of opportunity, I believe, in our fund. We believe that the banking system will survive, and if you believe the same, there's a lot of opportunity on the table right now for investors in financial bonds.
So what would you say to investors who are maybe considering buying into the fund, or the current investors, to what you're going to achieve going forward?
Well, basically, if you believe in the survival of banks, this is the place to be, you can say.
And of course, bond funds, because of what they are, they're a lower risk than an equity fund. So you could be looking at the sort of return that you might expect from equities out of a bond fund.
Yeah, definitely. That's definitely a possibility. You see enormous spreads for bonds of Royal Bank of Scotland and Barclays and other really big banks that are just too big to fail, you can say. Now,
you're a bond man, so you know what that phrase means, enormous spreads. But so someone that's watching this that doesn't know what that means, what do you mean by an enormous spread?
Around 4% more than you get in investing in gilts or government bonds. During the downturn in 2002, spreads were not even close to this level, you can say. So we have priced in a huge negative in the market already. So we believe that it's now time to buy the bonds of banks. Also, you see the banks starting to recapitalize themselves. Royal Bank of Scotland issuing a lot of stock now to show up capital, and that is really good for the bond investors, you can say.
And finally, as a result of being so excited about the opportunities, you also have changes to your team. What are you doing with your team at the moment?
We have expanded our team, so we are now 3 guys in our team. Yeah.
Klaus Blarbjerg, Senior Portfolio Manager for Fixed Income at Sparinvest. Thank you very much for chatting to us today.
Thank you very much.